Now, today's focus point is about Trump's Liberation Day yesterday and these tariffs that were supposed to be reciprocal. But as there has been digging, it's pretty clear that these are not reciprocal tariffs. They're using some sort of complex, that was actually simple calculation around the country's trade deficit and how much trade is done with the United States, which really doesn't have a good, doesn't create a good view of what the true tariff level is for a country on the United States. So it's incoherent. And if I was going to do this, and once again, as I said before the break, this is me arguing ideas. I don't care about politics. I don't care if this is somebody that's a Republican or a Democrat or independent. It's irrelevant. It's what impact does it have? And ultimately, this impact is going to be wide-ranging, and it's going to be, simply put, bad for the economy. Now, if I was going to try to reshore manufacturing, and I sympathize with that argument, for national security purposes, to bring a more diverse set of manufacturing capabilities back to the United States, increase the diversity of our economy, et cetera, I have no issue with that. But it has to be done in the right way, in a way that is well planned and understands how various industries work and what's needed to bring these jobs home and these manufacturing capabilities home. So tariffs can be part of that, but it should be a small percentage. It should mainly be about not just the sticks. That's what tariffs are, sticks. It should be all about carrots as well as job training. Because as you've seen with the CHIPS Act, companies are incentivized, carrots, to bring manufacturing of chips home. But if you go talk to these chip manufacturers, you'll see that one issue that they're having is staffing these facilities. Why? Because there's not a lot of people in America that have the experience to produce chips. So a lot of them are importing people from Taiwan who have done this before. And there's no job training around this to get the Americans up to snuff when it comes to their skills around manufacturing various products throughout the country. So you would need that. You would need carrots that give tax breaks, that would give cheap loans, et cetera, for companies that don't have the capital to reshore manufacturing, to build manufacturing capabilities, et cetera. And you combine that with some sort of reasonable reciprocal tariff, and I think over the long term, you can get a desirable outcome. Not everywhere, not everything's going to be perfect, but it's far more preferable than this. Right now, you're getting a 34% tariff on China. That's on top of the 20% that there already is on China, so 54%. India's 27%, Japan 24%, the EU 20%, and all of the countries face a 10% tariff no matter what. So overall, this is a level of tariffs that will rise above the Smoot-Hawley tariffs from the Great Depression. And this is a total abandonment of world trade order and is just completely protectionist. And, that may be what you think we need as a country to incentivize, or as in my words, poke the stick of corporations in order to get them to move manufacturing back. But once again, you can't just use tariffs. It will not work in a way that's material. The margin, sure, but the damage will be far greater than the benefit. So the president says that we need to close America's trade deficit. But the overall deficit that we have is because Americans save less than the country invests. Simple as that. The dollars that we're sending overseas are recycled into our markets. And now that is essentially over. And that's one of the big reasons why the market's selling off. It's not just that this is likely to incite a recession, but it's money leaving the United States. And you see that with the dollar. The dollar is down. Typically in a risk-off environment, the dollar is up because money is they're just selling assets, and let's just go to cash, right? Everything's go to cash is you buy dollars. In this instance, they're not buying dollars. They're taking those dollars and they're moving them to euros or to yen or to a lot of other currencies or to gold, right? And that is another really just dramatic change in what is happening here, is that the bastion of strength and safety that was the United States is severely threatened. And as I said, I believe it was earlier this week, Europeans own about $9 trillion in US equities. That's about 17% of the market cap. That money is leaving. That money is fleeing. And will it come back? Maybe. Maybe it will. But it's pretty clear that this is a new world. We're in the fourth turning. Things are changing. The question is there enough political bandwidth to save us from the brink of, just like I said, the worst economic policy that I've seen in my lifetime, and probably the worst one for America in 100 years. Now, the rest of the world, I think they'll be fine. We dominate global finance. We dominate military might, but we don't dominate world trade anymore. We're the largest country by economic might, yes. But the European Union is larger in aggregate than us from an economic perspective. Same with Europe, right? Or sorry, same with Asia, right? You take China along with Japan and all those other countries. They're much larger than us. So while we are important, it's pretty clear that President Trump has overstepped his hand. And this is a trade policy, if kept in place, that will be an abject failure and a disaster. Mark my words.